welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the trade setup of the day. And of course, we'll be speaking to top market experts to help you understand the key strategies that you need to adopt for today's trading session. Of course, after yesterday's Trump tariff-led turmoil across the globe, we may be actually looking at some sanity return to the D Street today. Of course, remember yesterday, the Nifty had opened with a 5% gap down, the steepest opening decline since March 23rd of 2020, since the COVID times. But the intraday volatility reached an extraordinary 1160 odd points, highest since June of 4th, the election day that we had seen, the Lok Sabha election results day. Of course, the India VIX or the volatility gauge also saw its biggest ever jump, surging nearly 70% in trade as well. And all of this led to almost 17 lakh crore rupees of a sell-off across the street as far as investors' losses are concerned. So it was a forgettable day at large, with the kind of Trump tariff spooking the D Street like probably never before. But of course, as we move forward, we had to really see how the overnight trade happened. Better off than what Thursday and Friday played out for the Wall Street as well. Even though it was very volatile trading session, the markets on the Wall Street did significantly end off the lows of the day, but definitely after making 52-week lows as well. So the Dow Jones dropped 350 points, S&P 500 ended 0.2% lower, Nasdaq ended just above the flat line. The Asia Pacific markets again in today's trading session gained somehow and were trading mildly into the green after the fears, even after the fears of escalation of trade war between the US and China that weighed on the sentiments. You could see Nikkei trading with just about gains of about 4-5% in trade. So that bounced back pretty sharply in trade. Rest of them are up by about 0.5% to 1%. So you can see Kospi up 1%. You can also see Hang Seng up by 1.5%. The Chinese index up by 0.5%. And the Gift Nifty is also actually indicating to a positive start, about 0.6% higher at 22,625 at this point in time as well. So that's what the indication is. Of course, as far as the foreign flows are concerned, remember the foreign institutional investors yet again did sell in the Indian equity markets 9,040 odd crore rupees as of April 7th. The domestic equity institutional investors, they net bought shares worth about 12,122 odd crore rupees, despite such a negative day on the D Street, thereby compensating more than what was lost by the FIIs yesterday as well. Definitely, one thing's taken in that investors' confidence was severely shaken by several factors: global recession fears, heightened concern about US tariff actions on Indian goods, substantial selling pressure on frontline stocks ahead of the earnings season as well. But when you compare India with other Asian indices, we did display some relative strength compared to the other markets, largely based on the optimism that the world's fifth largest economy will endure only minor setbacks rather than severe damage during the Trump tariff conflicts as well. That's what we'll try to understand as to how are experts really reading into the sentiments. We'll now welcome our top guest today. We have Mr. Gaurav Dua joining in. He's the head of capital market strategy at Mirae Asset Sharekhan. Gauravji, warm welcome. Good morning to you. You come after a day of insane moves on the markets that were seen yesterday, something that the first time investors have probably never seen in their lives. After COVID, there have been rare instances when the markets have actually shown this kind of a volatility, this kind of a havoc being played. Do tell us, sir, in hindsight, do you see it was being overdone as a knee-jerk reaction, or do you think this is just a starting point? There are so many news points getting covered on a day-to-day basis, so many statements coming in. Market experts worldwide, some of them already saying that maybe we already are in a recessionary phase. What does all of this statement really mean?
Good morning. Yes, it's been extremely volatile lately. And if you see yesterday, Dow Jones index had a swing of 2,500 points or 8 to 8.5%. And that is the biggest equity market in the world. So you had $5-6 trillion of basically up and down in the market in a day. Now, this is, very, very difficult kind of a market both for short-term traders and also for investors, because this does impact the confidence of the investors. Having said this, it was a pretty encouraging sign that the Indian markets did take support close to the recent lows, which was at around 21,900, somewhere close to that, and it recovered also intraday. Today, we are going to start at a positive note. Just few minutes back, you also had this new statement coming out that Indian External Affairs Minister had a very successful talks in US, and they are looking at speed tracking the bilateral trade agreement with US. Now, all this is a positive relief for the equity markets after a very volatile day yesterday. Having said this, I think there is a lot of news flow. World is still in a bad place, and to call out a bottom so early, I think it's very difficult. And nor do I'm an expect, nor do I am an expert on short-term trades. So I think it's a good opportunity for the investors to start buying. But to call out a bottom, which happened yesterday, market move, I think it will be rather early to do that.
Okay, fair point. So it may be a good opportunity to invest in. So if I have to ask you for our viewers to understand better, how does one really use the residual cash which they have, and where exactly should that money flow in? Something that is probably lesser at risk with flying statements on tariffs, changing statements every day.
So, the simple trade which everyone is playing right now is try and avoid export oriented companies, look at the domestic demand driven stories, and that is why you have seen stocks like Ultratech, Bharti Airtel, Gale of the world, which are now in this thing focus. And a lot of these exporting companies, especially tech, though there is no tariffs on tech, but there is risk that the spending by their customer, especially the banks in US, is going to go down. And obviously, the auto companies and a lot of these exporting companies in capital goods space are going to suffer. So that is the trade which is being played out right now. And this is something which I had also highlighted on your shows a week back or 2 week back, that one needs to have a larger exposure to large caps compared to small and micro cap, number one.
Yes.
Number two, you need to have a higher exposure to domestic demand driven kind of stocks rather than go and dabble in export driven stories, because the world is going to be very volatile in the short term.
Absolutely. Now, also just wanted to get a sense of India vis-a-vis the world. There's a lot of discussion around how India can actually become a beneficiary rather than a victim of trade war. How do you think that's likely to play out, if at all? And then, which are the key sectors that will probably drive this kind of a recovery, or a China plus one or an Asia plus one kind of a theme that could work well for us? Meanwhile, I'll just point out for all our viewers to see there is some green coming back on the street in the pre-open trade, 2.5% higher, 22,700 on the Nifty. Let's see how it settles as closer to the pre-opening trade, settling at about 907, 908. Gauravji, how do you see India vis-a-vis the world when it comes to trade war?
So yeah, it's very clear that because we are a domestic or inward-looking economy, we are going to do better compared to some of our peers when there is slowdown in the global economy or there is slowdown in the global trade. Second, we have seen that the reaction of the US administration towards India is much more, I would call, reconciliatory compared to some of the other the same countries. And I expect India to sign bilateral trade agreement, come with some kind of an arrangement earlier than most of the peers. So yes, we are better placed than some of our peers, Does this mean that we are going to have a one-way kind of a rally? I don't expect that, because end of the day, if the global economy is going to slow down, it will have an impact on the equity markets in India also.
Okay, fair point. So one has to be really looking at all of those data points when one looks at India versus the world as well. The other big important thing is now we are right a day ahead of RBI's meeting as well. World over, looking at this changing order post the tariffs, there is this question mark on as to how will interest rates be tackled yet again. What happens in the US Fed from here on? There have been, indications that probably 4, 5 of a rate cuts could actually come in. What would that mean for our own interest rates? We kept it stable last time around after having cut once. What do you think will happen tomorrow, and what can it do to continue to make our economy stable?
So the consensus expectation is that RBI is likely to go with another rate cut, and they have a space to do so. Oil prices are down, so inflationary pressures are down. Number two, the bond yields in US have also this thing come down, so the rate difference between US and India is also not this thing narrowed down. It's basically there is space there also to cut. So the consensus is yes, there could be another 25 basis point cut, which would come from RBI. More importantly, what RBI has done is that they have ended the year in a liquidity surplus in the overnight market. Now that has been in the deficit for a long time, and in the range of 1 to 1.5 lakh crore, and that has been putting pressure on the interest rate in the domestic banking space. I think with the liquidity infusion, OMOs which has been done, I think that has provided a big relief to the domestic, basically interest rate, and also the banking system.
Okay. When it comes to the banks, I wanted to just take your view on that one as well. How would you look at the banks and financials at this point in time? Do you think banks and financials have a significant hedge to provide, looking at their domestic oriented nature when it comes to, the world, looking at wild swings and changing themes? Do you think banks and financials, which already were being seen as, at the right point, looking at the as the most consensus play in the markets, do have that extra edge because of tariffs as well?
In fact, banking actually underperformed yesterday from the lows when we this thing recovered in the equity market yesterday. I was expecting banking to actually lead it, but that was not the case. In fact, my technical analysts seem to be negative on the banking sector side. However, we fundamentally believe that private sector banks do look good at this point of time. Valuations are very, very attractive. In that space, we like ICICI Bank, HDFC Bank, followed by Axis Bank. So these would be our picks in that space.
Okay, fair point. So that's as far as what would be the consensus place. A lot of stocks will also be in focus. Let me just come to that so that our viewers know what exactly to focus on today, and then we can come on to our macro discussion yet again, sir. We have a lot of business updates coming in. I want to start off with Titan first. The company is saying that they've ended FY25 on a strong note with a 25% year-on-year growth in Q4, supported by a broad-based performance across key verticals. The retail network has added 72 net stores, taking the total count to 3,312. Jewelry segment, the largest segment of the company, has posted a 24% year-on-year growth, largely driven by the gold prices that was also being expected. But there is some slowdown in the newer segments like a Tanera, for instance, as well. There have been some concerns too. How would you look at Titan, for instance, at this point in time, amidst all the gold price rally that we have been seeing, and how things are shaping up and maybe presented in the Q4 results?
So yeah, there were very strong numbers which have been announced by the Titan. Most of the business have shown a 20% plus kind of a growth, which I think is quite healthy. And then again, Titan is a domestic demand-driven story, and we just think like the stock. So Titan is has been a pick for us, and we are also holding the stock in our fund.
Okay, fair point. The other the other update that we got is from the defense players. BEL has secured another major contract, 2,210 odd crore rupees from the Ministry of Defense. Now, these order flows have been coming in from last 2 weeks or so. There have been, bigger orders coming in. Biggest one for HAL is what we saw. But what happened yesterday again is also again hinting at what you also pointed out that the export-oriented nature of some of these companies will again be at risk of what really happens worldwide over. Of course, domestic orders continue to escalate. How would you really look at the entire defense story? What continues to be, looking attractive to you despite all this volatility, sir?
So, defense was a space which had become overvalued, and I've been very, very cautious on the space since August, September on your shows. I think the prices have come down, valuations are looking better now. Some of these stock specific or company specific issues, like, delay in basically engines to HAL, which is now we are over it. Moreover, this whatever is happening globally, I believe this will actually bring focus much more back on the defense by the same government. Now, the all these allies alignments are shifting so fast globally that depending on foreign vendors for bulk of your defense buying purchasing is going to be creating higher risk for any country. So I think domestic or indigenous production is going to get a much bigger push now. And I think defense anyway was a structural story with whatever has happened in past few months. I think defense will be focused for the this thing policymakers as well as with now valuation in the comfortable zone. I think that's a space one should look at.
Okay, fair point. The other major news flow that came in last afternoon, evening, and there have been a lot of clarifications going, is the government's move on LPG and on fuel prices. So, just to understand that a little bit as well. Of course, on the fuel prices, the excise duty has been announced. Consumers will not have to pay, but it will have to be borne by OMCs, is what the government has clarified. But this has clearly dashed the hopes of any kind of price cuts because of the lower crude prices that have been looking at. Of course, LPG also, the government has raised the prices of household LPG of all categories, including subsidized refills supplied to poor families under Ujjwala scheme as well. How are you looking at what's going on here? And what should one remember when one deals with this oil and gas space?
So, my sense is that, given what is happening globally, government wants to keep its war chest ready of basically increasing the spending on the infrastructure allocation just in case the economy takes a bigger hit because of the global slowdown or the slowdown in this in global trade. So that's where the government will have to step in, increase the spending on infrastructure, capital goods, and that is where I think this move is largely this thing focused on, which I think is the right thing. In fact, what we read in the media reports now is that government has actually going to exceed the 10.18 lakh crores revised number which was there for the budget of FY25. So I would expect they would be looking at further increasing the spending in this year compared to what has been already budgeted by them.
Okay, got that. Let's also welcome, we have another guest joining in on the panel with us, Arpit Beriwal, analyst for derivatives at Wealth Management, Motilal Oswal Financial Services joining in. Arpit, warm welcome. Good to have you with us on the program. Well, finally, some signs of green returning to D Street after, we actually saw bloodbath on the D Street yesterday. There is a near 300 point of an uptick expected as far as the pre-open settlement is concerned on the Nifty, and the Sensex also about 850 points higher in trade, so about a percent odd or so. So, do you think sanity will finally return after things turn topsy turvy on just a single day as yesterday?
So if you talk about the indices first, Sakshi, if we look at the overall broader market and the global market, we've seen a total carnage across all the indices in last couple of sessions. So if we talk about particularly Nifty and Bank Nifty, yesterday we've seen one of the steepest gap down opening. And if you look at the technical structure wise, from last almost 2 to 3 months, Nifty is trading in a broader range, and the range is quite broad between 21,850 to almost 23,800. In last couple of sessions, we have seen again fall from 23,800 levels towards 22,000 levels. So now on the immediate basis, definitely there could be some pullback. But along with that, one key thing that we need to focus on is the India VIX, that is the volatility, greed, and fear indicator. So yesterday it has seen a spike of almost 67%, and that is one of the biggest intraday spike after almost 10 years. So that
Yes.
would be one of the key sentimental indicators that will drive the overall market setups. In between, definitely as the news flows is going on and off between regarding trade tariffs, so definitely volatility will be there. So our sense is that in Nifty, the range would be broader range between 21,800 to 22,800 because you've seen a sharp spike in VIX. And the important part would be the closing basis, how fair the indices able to hold their gains or not. So we are seeing a gap up opening, but the important part would be for next couple of hours whether the positive openings are able to sustain at current levels or no, and accordingly we have to play the texture depending upon the market indices levels.
Okay. Arpit, any key stocks that you will keep an eye out on? Do you think one can actually risk to, step in for a buy? It was all sell yesterday. Only the short sellers made money. Those who held on to the short position since earlier. But do you think now is the time to start looking at buying as well after prices have corrected sharply yesterday?
Talking about the stock specific, so we have been very much bullish on the financial and the NBFC pack, and this has been a
Okay.
top sector from last almost couple of months. If we see last couple of session, definitely we have seen a correction in financial index and bank nifty also. So definitely we would be going with the banking space as a whole. One would be from the NBFC space, that is Bajaj Finance, and the second would be from the private space, ICICI Bank. So looking at the overall first Bajaj Finance chart wise, a clear uptrend on the monthly scale, some cool off we have seen on the daily scale from last few days, but again backwards 50 dema. So that is acting as a major support zone for this stock. So overall the bias is positive from medium term to long term, with a major support around 8,300, 8,400 levels. The stock can definitely head towards 8,900, 9,000 plus levels. Second would be a preferred pick within the banking space, that is ICICI Bank. So if you see last couple of months, ICICI Bank been a very strong outperformer, and this has mainly drive the Bank Nifty rally. So looking at the overall chart setup wise, ICICI trading their life high territories. A good cool off we have seen from high levels, almost 3 to 4% correction from high levels. It has retested its previous breakout zone around 1260, 1270 levels. I think slowly, steadily, as we are result season also picking up, definitely we can see move towards 1350, 1380 levels positionally on ICICI Bank. So this two would be preferred picks as of now from the banking and the NBFC space.
Okay, we'll definitely keep an eye out on these banking and financial names as well to keep an eye out on the buying side today. Finally, some buy calls coming in, and Santi could return as we expect the markets to open higher at 22,446 odd levels, about 1.3% higher is the indication. Just within few seconds, so we will have the final ticks. Yes, we do have them. 22,475, 22,500 on the Nifty, 355 points higher, 1.6% up. Nifty Bank also higher by nearly 729 points up, 1.5% higher for even the Nifty Bank at this point in time. Let's pull up the broader markets to see whether the recovery has taken shape across the board in trades today. Remember, yesterday we did see even the broader markets come under heavy selling pressure. Because of the overall markets. IT sector is actually up. Remember, this was one of the worst hit sectors yesterday. 2.4% up in trade. So recovery taking shape. Remember, yesterday we saw a big heavy weights of IT, Infosys, TCS, all of them coming under severe pressure. That is something that probably might see in turning into some green. So INFI is up by about 3% in trade today. So you do see strong move on that front, slight gains even on HCL Tech. Let's pull up the broader markets, mid and the small caps, and bring that in front of our viewers as well to see how that one is taking shape. A lot of our viewers are focused on to mid and small caps. Yes, the mid cap 100 index is up by about 2.5%. So that's also on a positive factor at this point in time. Let's look at the small caps, 2.4% higher. Again, across the board, there is some kind of positivity that you can clearly see on the street. Let's actually look at some of the heavyweight private sector banks, ICICI Bank, something that Arpit talked about, to see how that one is also moving in trade today. Banks and financials, about a percent up at 1300 levels. Let's also pull up Bajaj Finance, and let's look at the NBFC names, about 1.7% higher. There's also a brokerage house update on Bajaj Finance that's also leading to this momentum. Let me actually give you an overview of the entire space onto the markets. So the Nifty is higher by 1.7%. The Nifty next 50 names are even better, 2.5% higher. Nifty Bank up 1.5%. We have financial services up 1.5% as well. You can also look at the mid caps and the small caps that are up now. The small caps are rallying even further, 3% higher now. India VIX is down by 11.5% at 20.18 levels. Huge sigh of relief on that front after it showed 1 day single move at a peak of about 70 odd percent yesterday. Let's look at the sectors. Autos driving the show, 2.2% higher. We also have FMCG up by 1%, IT now 2.8% up in trade. Metals, remember again, a space that was beaten black and blue, 3.6% higher. All the sectors of the Nifty are actually up and about, and that's a huge sign of relief. Oil and gas also up by about 2 odd percent. Consumer durables nearly 4% higher in trade. Across the board, you have very, very strong moves that are being seen on the sectoral front too. Let's look at the top movers. BEL on that order flow about 4.8% higher, top mover. Tata Steel about 4.4% higher. Titan on that business update 4.3% up. JSW Steel about 3.5% higher. Tech Mahindra also returning into the green, 3.5% up. Tata Motors, fresh updates coming in from brokerage houses despite the underweight stance. We have about 3.5% higher. Recovery from yesterday definitely playing part. Infosys, Hindalco, Trent, remember, was down by almost 18-19% yesterday. We have seen some recovery come back on a Trent as well today. All the stocks on the Nifty are into the green. It's a bright shade of green that you can actually see. All the 50 stocks of the Nifty are actually up and about. Arpit, coming to you, how do you see the opening?
Sakshi, if we see, we have seen a very good opening, and the important part over here is if you look at the heavyweights, as the result seasons are lined up, and you have to key focus on the heavyweights, whether it's the IT sector, Reliance, or the banking. So good part is that so far the IT and the banking, relatively we are more bullish on the banking as a whole. That is likely to be more stable as compared to the other sector wise. So far looking at the setup wise, the heavyweights are holding well. Let's talk about the banking or NBFC space, or from the finance, gold finance company Titan and IT stocks. So far the opening looks good, and immediate basis 22,500 to 22,800 is the gap area on the daily chart. So Nifty yesterday, the major area is around 22,800. On the immediate basis, 22,500 is the major level. So Nifty is hovering around that level. So next an hour or so would be crucial how this overall rally plays it out. But apart from that, one more thing I would like to mention, there are few stocks that are looking very strong. And one thing I would like to highlight on from the mid cap space also, that would be Indigo. So if we see the overall chart setup of Indigo, one of the strong outperformers within the mid-cap space, if you look the chart setup as on the monthly scale, a strong bullish candle in spite of market volatility, trading in knife high territories, and definitely the base of the stock is shifted higher from 4,500 to 4,800, 850. And going forward also, we expecting a good positional up move towards 5,350, 5,500 plus levels. So one of the mid-cap space that looks interesting at current junction would be Indigo from the mid-cap space.
Okay, got that. We'll keep an eye out on these stocks also. Let's get back to our conversation with Mr. Dua as well. Mr. Dua, some relief coming back onto the day straight after yesterday's sharp losses. But do you think this is again going to be extremely vulnerable to what happens, and how statements come in on tariffs going forward from here? Even yesterday, we have actually seen that Donald Trump has indicated that he might be okay to discuss with some countries on tariffs, but there is no hint of any negotiations as such or bringing down of what exactly has been announced thus far. What do you think could be the stance that India really takes when it comes to, tariff talk with the US, and how that will play part, sir?
So, some of the larger players are basically taking the US actions basically head on. They are also trying to levy import tariffs on US. I think compared to that, India has taken a much reconsiderate kind of an approach where they are trying to talk to the US administration, come out with a formula which will be better for us and better for them. I think that's the right kind of approach. Having said that, this is something which will go on. There are going to be a lot of statements, a lot of action. So I think volatility will not get over in a day. Okay, so there is going to be a lot of ups and downs in the near term, and that's the way to look at the market.
Okay. There has been some indication from Reuters saying that India may be open to lowering auto import tariffs now down to about 10 odd percent from 100% that exists. I mean, this has been one of the key, factors which has been in discussion with the Trump government, not just this time from the starting, but even the previous time when he was the president as well. We have seen actually in the past how discussions around Harley Davidson had panned out, and that was a key disturbing factor for the US. And one of the things that they really wanted India to take a back step on, we did come on reducing that, but even then there have been these newer tariffs of 25% odd. What do you foresee on the auto space particularly, sir? And what does it augur for players like Tata Motors, which have already stopped the supplies of JLR to the US now?
So yes, this will bring in competition in the Indian markets. Not only the US listed car makers, but also if you bring down the tariffs, it's going to be for the other players also. The Chinese cars can also flood into India. So yes, it will create some kind of a pressure on the domestic players. But overall, we have seen in the past also that domestic industry will have to step up, improve, innovate, and this thing compete in the world. So they have been able to export most of the players, and I don't see why they'll not be able to compete in these domestic markets.
Okay, fair point. That's as far as the auto space is concerned. I also wanted to ask you, Mr. Dua, what happens to the broader markets as well, the mid and the small caps? Since you did also point out that large caps is where one should be absolutely focused on at this point in time. What really is the kind of focus on mid and small caps that you would advise at this point, and the strategy?
So, it's been a long time since August, September last year that I have been repeating this on your shows that, please avoid or reduce your exposure to small cap, micro cap. One, because the valuation is not comfortable anymore. Second, you have a long 17, 18 months of a one way kind of a rally, and normally it follows with some kind of a correction in that space. Unfortunately, the correction in that space is very, very painful. The small cap index can go down by 30, 35%, and your individual stocks go down by 50, 60, 70% also. So we have already seen a 19,600 points small cap index come down to close to 14,500 yesterday. I think this bounce again is an opportunity where you can lighten if you are overly skewed towards small cap, micro cap. We still believe that next 6 to 8 months are not going to be easy for some of these stocks. Though yes, after this fall, some spaces, certain stocks are starting to look good. But on a overall basis, we still advise a reduction in exposure towards small cap, micro cap space. Basically, we feel that the risk reward is much, much better now in the large cap space, and any new rally has to start with the large caps, right? So, I don't see any point in basically increasing exposure there.
Okay. Mr. Dua, is there any pocket that you would still keep as a big avoid? Even if reversal starts, even if there is some bounce back on the D street, even if we think that, things are returning back to their earlier trend, would there still be some pockets that would be more vulnerable than the others to external shocks?
So I think given what is happening globally, the global commodity space is where I would be still very, very cautious. That space
Hmm.
anyway is extremely volatile. There, I mean metals, oil and gas kind of stocks. That's
Yeah.
where I believe the volatility will stay, and it's going to be very, very tough for the investors to, uh, uh, digest that kind of a price movements.
Okay, got that. We'll definitely keep an eye out. And it let me come to Arpit also just do some stock spotting at this point in time. Real estate is something that I was keeping an eye out on. How are you looking at Godrej Properties, Arpit, after the company has recorded its highest ever bookings in Q4 and in FY25? I think this was also being seen as one of the preferred picks in the real estate space in the last rally that was being seen on the real estate pack as well. How are you looking at a fresh on this stock today? It's up by 4.7%. Even Sobha shares are back in focus, although their FY25 sales value has fallen from last year onwards. What is really going good, and what could be still on a sticky note as far as real estate is concerned?
Sakshi, if we see all the reality pack, since the correction have started, broadly the index have underperformed definitely. We've seen a good correction in the stocks across all the board. So particularly if we talk about Godrej Property, if I look at the monthly and the weekly setup, the stock was in totally downtrend. However, from last 7 to 8 weeks, the stock is in a range between 1900 to 2250 levels. So kind of, if you just go long back to 2023, from where the rally started around from 2000 levels towards 3400, now the stock is taken support, it's at major support zone. So on the immediate basis the stock is still stuck in a range because it's trading below its 200 dema and 50 dema. Any closing above 2200 on the spot levels would definitely change the setup for the stock. As of now it's trading in a range with between 1950 to 2200, so it's better to play within this range. Also, one more thing I would like to highlight, as the volatility is quite high and definitely you're seeing big gap ups and gap down moves. So broadly, it's better whatever the intraday positions you are playing out, it's better to play it intraday and avoid keeping for the overnight view. Coming back to the reality pack, it's still in a range. 2200 would be a key level for any decisive change in the setup going forward.
Okay. Coming back to Mr. Dua, before I let you go, sir, the other key important point will, of course, be the earnings season that kickstarts just about days from now. What's your expectation there for Q4, especially on the IT sector that starts off the earnings season with TCS coming in with its numbers, this time on a market holiday? How would you really look at the entire IT sector's performance? Do you think there will be a question mark on whether the companies will give guidance looking at the kind of uncertainties that are going around in the US? And of course, your overall expectation from this quarter, sir.
So yes, it's going to be another very very tough kind of this quarter. We are expecting around 1.5-2% growth in the earnings of Nifty. So for FY25, we are going to end on 4.5 to 5% kind of a growth for Nifty. That is one of the lowest in last 4-5 years. For FY26 also, the earning estimates have been cut on a regular basis. At the start of the year, the consensus was expecting around 15-16% growth. Now it has come down to around 11-11.5% growth. So yes, there is a clear earning slowdown, and whatever is like happening in the world as of now, this will only create a lot more issues in terms of the growth in earnings. Now, coming specific to the IT sector, what we saw in quarter four is that the new deal wins have been among the lowest in past few distinct quarters, and that is what is also dented the sentiments on the IT stocks. The commentary also for the demand environment is not likely to be great. Normally, at the start of year, you would want to see what kind of growth, volume growth numbers that the companies are talking about. With so much of global uncertainty, I think it will be very, very difficult for them also to give any kind of a healthy growth number for FY26. Now that will keep these stocks under this pressure. So in that space, what we are saying, what we have been saying is that you got to be extremely selective here. I think you should wait to enter some of these stocks. And in terms of our preference order, we like HCL Tech and Infosys in the large cap space. In the mid cap space, we would like to go for Coforge and and the Semastech.
Okay, we'll keep an eye out on all that. Well, thank you so much, Mr. Dua, for being with us in this session today and helping us to navigate through all of these, challenges that the markets and investors face at this point in time, and yet being able to scout for opportunities. Thank you. Always appreciate your time with us.
Thank you so much. And I will just want to add that most of the stocks that I've spoken about, we have been recommending them to our investors and also be holding them in our funds. So we have vested interest in these stocks.
Thank you so much for disclosures in place. We'll continue our conversation now with Arpit. Arpit, first 15 minutes of a candle out, what do you foresee for the markets? Are we at a better footing at this point in time? Do you think the recovery will further inch higher towards the course of the day?
Sakshi, if you see, first I'll talk about the Bank Nifty. Relatively, Bank Nifty has been an outperformer. Except the yesterday gap down opening the Bank Nifty index, broadly it was quite resilient in spite of the market turmoil. So if we talk about the banking structure, the main recovery is likely to be from the banking space because the structure of the NBFC and private banks are relatively much more better. And I think whatever happens around the banking, that would be a key level to watch out for. Coming on to the levels wise, Bank Nifty initially 50,800, 850 was a major support zone, and now the index is right around that levels. So setup wise, on the immediate basis, 50,000, 50,250 would be a major support zone on the intraday basis. Whereas on the upside, 51,000, 51,250 would be the key levels to watch out for. Along with that, today we have seen good action in the PSU banks. So definitely that would definitely help the supportive up move along with the private banks within the banking space. Now talking about the Nifty. So overall Nifty, if we talk about, definitely Reliance and IT makes a huge component for the Nifty index. Talking about Nifty, so today we have seen gap up opening and right now so far it's holding well. So on the immediate basis, 20 to 400 would be a key level intraday basis or major support zone. Whereas at the same time, upside is capped because of the ongoing the issues that are there. Definitely we are going to see swings on the either side of it until the time India doesn't cool off much below 14 15 levels. Definitely there could be a wild swings on the both the side, but relatively if you want to see the outperformance would be gungo about the private banks, NBFCs and the PSU banks from the financial bank.
Okay, fair point. Hopefully, that has also given you some sense as to how should one be really looking at the markets. Where do they go from here? A lot of movers at this point in time. Let me just spot a few for all our viewers. PG Electroplast is moving in the broadest index, Nifty 500 index, 7.5% higher. You have even the capital goods stock, capital market related stocks like KFin Tech, Angel One, about 5% each. Then you also have names like Keynes Technology also buzzing in on trade, another 5-6% of a kind of a move. Titan, of course, is one of the top movers on the Nifty. Then you also have MCX from the exchange related stocks that also are buzzing in trade. Let's actually discuss this one. Capital markets related story going strong yet again. BSC, MCX, Angel One, K FinTech, all of them coming back in flavor. What will you do here, Arpit?
Actually, if we see overall, the theme has been a very much a strong outperformer. Since the correction from December, we have seen already a good correction of 30 to 40% in majority of the stocks. But now, looking at the things from the position setup, the things are getting stabilized, at least in this space. So within this space, whether it's BSC, whether it's MCX, or whether it's KFin Tech, all overall the setup wise, the structure wise are relatively better. If you talk about pure play from the exchange wise, BSC and MCX are relatively better. And looking from a chart perspective, they are going to be the outperformers going forward. Apart from that, if we see from another space within the same space, KFin Tech also relatively looks better. So I just pull out the chart on the monthly and the weekly scale. from where the rally started from 1000 levels to almost 1600. The stock is taken support back to its around 950 and 1000 levels, and now again we've seen a strong recovery from the lower levels. So from the immediate basis, definitely a volatility would be there because of the global concerns, but definitely the base of the stock has shifted higher. And from couple of months perspective, definitely we can see a good up move towards 1150, 1200 plus levels. So this within this theme wise, MCX, BSC, and KFIN would be a top pick within this space.
Okay, let's look at Titan also at the same time, Arpit. How would you really look at this one? Soaring now 5.8% higher for Titan after that business update indicating a growth on year-on-year performance of about 24% indicated for the upcoming results. What would you do here?
Titan, if we talk about Sakshi, it has been in a very broader range consolidation from last almost 18 to 19 months. The stock has been trading in a range between 3000 to almost 3600 levels. So if I look at the setup on the immediate basis, a very rock solid support near 3000 seems to be intact. And from there, yesterday you've seen a good recovery from the lower levels, and today after the result update, definitely we've seen an uptick. So on the bias from the gold finance company basis wise also, the setup wise is positive, but at the same time 3400, 3600 is a major supply zone. So it's a trading counter of stock where you can buy near 3100, 32 levels with a major support around 3000 for an upside move towards 3500, 3600 zones.
Okay, fair point. Let's actually look at some of the other heavyweight names also. I wanted to discuss with you on Reliance Industries. Again, remember, as of yesterday, with the sharp decline in the overall markets, I think Reliance, because of its weightage alone, it lost about 62,000 odd crore rupees of market cap. Now hovering around 1175 odd levels. Do you think for those who've been looking at an opportunity to accumulate Reliance, is this at a right level?
Definitely, I have to talk about the reliance over the monthly structure as we are looking from a bigger time perspective. This counter has been in downtrend for the last almost 6 to 7 months, and you have seen it the setup wise the stock corrected from 1600 to almost 1150 levels. So, from a bigger time perspective, the base of the index where the reliance the rally started it was around 1000 levels, and now the stock is back to its previous levels. So, from a bigger time perspective, definitely 1100 level. 1050 is a major levels, a major support zone to watch out for. However, on the immediate basis, the stock is still in a range, but definitely from a medium term to long term perspective, it's a definitely add-on stock. Definitely a further dip towards 1100, 1120, definitely an added up from a bigger time perspective with an upside move towards 1300 and 1400 from a position point of view.
Okay, fair point. Got that as well. Also wanted to just get a sense on some of the other spaces. Trend is another one that I wanted to bring in from the Nifty stocks. Why am I discussing this? Yesterday, this was battered black and blue, 18% or it was a top loser on the Nifty. Just about a mild shade of green today, 4,757. A lot also had to do why this stock lost the most was because of the business update that it gave, and there was some kind of a disappointment that was being expected, lower than expected kind of performance in Q4 is being indicated at this point in time, and that also added on to the overall negativity that came into the markets. How should one view trend? A lot of people came in and asked, those who missed the previous rally after this 15-17% fall, should one look at it? But are things placed very well, or do you think there is some risk at the higher levels?
Looking at from a price perspective, yesterday was one of the biggest loser. And if even if we see on the daily and the weekly setup, definitely the gap down opening from 5500 to almost 4800, it holds a very strong supply zone. So from the immediate basis, the key level that has to be watch out for any change in the setup would be 5000 levels. A closing above 5000 level will definitely put the stock higher, but till the time the stock is below 5000, definitely the volatility would be there within the stock between a range from 4500 to 4950. So I think better to wait and watch. There's no rush, no need to hurry to buy the stock. Better to watch out for 5000 levels, and definitely a closing above that would definitely start the up move going forward.
Okay. Let's focus on the oil and gas sector yet again. Arpit, HPCL, BPCL, IOC. Stocks in focus after the special excise duty and LPG prices. How would you look at it?
Talking about the OMC, so yesterday they were the silver lining in the market, but as soon as we see in the last hour, there was some news regarding the excise duty. Definitely, we see some cooler from the higher levels. So if I just pull up the chart of the OMCs across all compared to HPCL, BPCL, IOC, I think relatively HPCL is betterly placed on the charts on the monthly frame. So on the monthly scale, good recovery of seen from 300 levels to almost 350, 360 levels. On the immediate basis, the stock is stuck in a range, but the good part is that it is holding above its 20, 50 and 200 DEMA. So overall, major support is seen around 335, 340 levels. Until it holds above 340 levels, we can see an uptick towards 365, 375 levels. So within the OMCs, HPCL would be a preferred pick. Then for a slow and steadily move towards 365, 375 plus levels.
Fair point. Let's look at the other spaces then. I wanted to discuss about the PSU banks also, and one bank in particular, Bank of Maharashtra is in focus. Remember, the shares had hit a 52-week low. There is some kind of a rebound, and that's after the 17% advance growth that one has really seen. Remember, Arpit, when we used to talk about the PSU banks rally, one of the most preferred spaces, these stocks were soaring on an everyday basis. Everybody was going heavy on PSU banks, first rank PSU banks, second rank PSU banks as well. Almost year back is something that we would discuss this a lot. How would you look at Bank of Maharashtra and the PSU bank story as of now?
First, we'll talk about Bank of Maharashtra from the price perspective. So, if we see the chart setup wise, as rightly mentioned, for the last almost 10 months, the stock is in downtrend. The stock corrected from 74 levels to almost 45 levels, and right now also there is no major respite. So, from the level wise, 48, 49 levels is a major supply zone. Till it doesn't close above that level, will not be much more bullish on the counter. But as a whole, if I talk about the PSU pack as a whole, the two preferred picks would be there from the PSU pack. Would be first would be from the biggest bank, that would be SBI. So SBI, we've seen a good correction from 900 odd levels towards 700, and we have seen a good recovery from lower levels. And as we are positive over the financial pack, so SBI looks promising at current levels. Definitely can slowly steadily head towards 800, 820 levels with a positive view mind frame, with a major support around 740 levels. One more stock that is looking good from the PSU pack would be Indian Bank. So where all the stocks within the PSU banks were correcting, Indian Bank is holding at life-high territories. So on the monthly scale, it has been stuck in a range between 500 to almost 620 levels. But the good part is that it is still trading at higher levels with a major support around 480, 500 levels. With a major hurdles only around 575, 600. So Indian Bank would be a second preferred pick within the PSU basket. As we see some recovery in the PSU banks, this stock is likely to lead towards 575, 600. So SBI and Indian Bank would be a preferred pick within the PSU basket.
Fair point. Let's actually look at the financials. Bajaj Finance yet again. Remember, CLSA has now an outperform rating, and they have raised the target price to 11,000 on this one. And the stock is up 2.5%, 8,785. The stock has already been one of the favorite NBFC stocks of the last 1.5 months, 2 months odd, and it has shown some bounces as well. After the recent rally, can one still enter? I mean, should one play for that 11,000 kind of a target that some of the brokerage houses are giving?
Sakshi, if I just pull out the monthly chart of Bajaj Finance, I'll talk from 2021. From 21 till 24, the stock was in range for almost 3.5 years, between 6,500 to 8,200 levels. And then again, we used to see supply from 8,200 levels. But this year, from the onset of January series, we have seen a sharp outperformance, and it gave a classical channel breakout above 8,200 levels. So from a positional perspective, looking at the pole and flag breakout pattern on the monthly scale, definitely the stock can head towards 5 digit. But because of market turmoil and global volatility, the stock is moving slowly, steadily. But definitely from positional perspective, we are very much positive on the counter. Till the stock is above 8,000 plus levels, definitely the stock can head towards 9,500, 10,000 from a medium term to long term perspective.
Okay, fair point. I hope this has also helped everybody understand how do I approach the NBFC major like Bajaj Finance. Let's look at again some of the hourly gainers. Strong momentum from the broadest index, Zensar Tech. It's up by 14.4% today. A sharp rally that can be seen. It's one of the top movers, in the hourly moves that we are seeing at this point in time. Let's also look at some of the other stocks that are in focus. Indigo was already marked by Arpit. That was also in focus. You also have Info Edge that's moving. Keynes Technology, all of these stocks are actually buzzing. PNB Housing, Glenmark Life Sciences, sorry. Then you also have PNB Housing Finance. All of these stocks that are buzzing in the broader markets at this point in time. We'll also look at some of the other names that are buzzing. We have Vijaya Diagnostics also that's moving. Let's actually discuss the pharma and healthcare pack that we haven't discussed yet. I wanted to discuss overall pharma and healthcare pack with you, Arpit. This has been again in focus because of tariff news. At first, it was believed to be safer zone to be in. Thereafter, statements came in that pharma is going to be on top of the radar. It will be seen as a separate. We will have tariffs like never before on pharma. Something that has been charged at zero could actually see any number of tariff coming in. How does one really look at the pharma stocks within their portfolios at this point in time? And is it a point to exit looking at what could be coming in? Should one continue to keep in focus that pharma is something that has a long structural story to play at? What should be the ideal approach here?
Well, discuss the one things one at a time. So if we talk about the pharma as a space, obviously a lot of things have changed in the last couple of weeks post the announcement. But if you see overall from the long-term perspective, pharma has been one of the most defensive sector, and since COVID, it has been a very steady uptrend. So definitely there have been some hiccups during the up course, but definitely if we from see the monthly chart perspective, definitely the index overall is in strong uptrend, and within that there are definitely multiple plays that we can play it out. So there are few companies that are domestic focused, there are few focus that are definitely international focus, but along that one more space that is looking promising within the pharma is the healthcare space, the mainly diagnostic and the hospital space. So if we see for few counters within the pharma, for example for Apollo Hospital, so Apollo Hospital has been one of the huge outperformer in last couple of years, and going forward also we expecting as the things ease out, definitely the counter will definitely regain its momentum. So from technically also one of our top pick within the pharma pack would be Apollo Hospital. Look at the monthly structure, a classical uptrend with a base shifting higher above 6,200, 6,300 levels. The stock corrected from high levels, but the bigger trend is still intact, and slowly, steadily as things stabilize, we can again head towards 7,000, 7,200 plus levels. So one from the hospital pack would be from the Apollo Hospital. Apart from that, definitely there are a lot of other plays that we can play out from the pharma space. But I think better we can wait for a couple of weeks how things shape up, and then accordingly we can take a call. If the things stabilize, definitely we can re-enter in selective pharma names.
Hmm. Okay, got that. Well, let's help all our viewers understand on the FNO. What are you looking at Arpit today? Long side, short side. What would you like to highlight from the FNO pack today?
So from the long side, we have already discussed a couple of ideas that would be from the
Yeah.
banking financial pack, but from the pharma space itself, one of the weak side that we are seeing mainly in the mid cap and small cap is granules. So if we see the chart setup was granules, in totally downturn from last 6 to 7 months. On the weekly scale, it has given a range breakdown after 6 weeks below 440 levels. On the daily scale, also it is holding lower. So definitely, as the bigger trend on the market is still volatile and bearish, so definitely we can see some weakness in this counter towards 415, 405 levels. So granules would be one of the ideas that can go on the short side. Apart from that, one more counter that is looking weak is relatively is Aarti Industries. So Aarti Industries also is totally in downtrend from last almost 8 to 9 months. On the weekly scale also it gave a range breakdown below 365, 370 levels. Today the stock is marginally up, but the bigger trend is still in pain around 370. So definitely 370 is a major hurdle zone. Downside the support would be around 340, 335 levels. So these two counters would be there on our radar on the short side.
Okay, fair point. Well, Arpit, we will then thank you on that note for being with us and helping us with so many ideas that one can look at in this market. Hopefully, things start to look better from here on. Slowly and gradually, we move to higher zones. At this point in time, still looks a little topsy-turvy, but let's hope that things find their feet as far as the markets are concerned sooner rather than later. Arpit, thank you so much. Appreciate your time as always, and hope you have a good day. And we see you in a brighter shade of green when we meet next. 22,470 on the Nifty at this point in time, viewers. Let's also look at how things are shaping up. It's actually pretty okay. 50,498 on the Nifty Bank, about 1.2% higher, 632 points up. The broader market slightly better off, about 2% higher as well. Sectorally, the action looks strong across the board. We have all the sectors still holding up into the green, be it the Nifty 100, 200, 500 baskets. Let's look at even the sectoral action. Autos, for instance, IT, those which were the vulnerable packs are also in the green. FMCG metals also higher. Pharma is up by 0.5%. PSU banks up 2%. That's in the thick zone. Real estate, private banks, healthcare index, consumer durables also 3% higher. Oil and gas, that's also buzzing. All the sectors are still up and about in trade. And when we look at the key stocks within, say, the Nifty, that are moving. Of course, we have discussed quite a bit of them. We've discussed BEL, the top mover. We have discussed Titan. Shriram Finance is picking up. So NBFC is now full throttle. Bajaj Finance we discussed. Bajaj Finserv is also up and about in trade today. We can also look at some of the other IT-related stocks that will be in focus now because of the earnings season starting on. And barring just about two stocks, Power Grid and SBI Life, rest of the stocks are still holding up in trade. So let's hope things improve from here on. We'll continue to get you all the insights from the world of markets. In case you have questions about the stocks in your portfolio, send them to us. We will be happy to take them on daily calls. I'll be back at 12 noon for that, when we can address all of those stock-related queries. Stay tuned with us on Business Today Television. Many thanks for tuning in.
Kind of like a logical disconnect between the stories, the competing stories that your team is using to attack President Trump. On the one hand, you're saying that the countries are really angry and they're going to have to retaliate. On the other hand, you're saying that consumers are going to bear the costs and it's going to drive inflation up. But if U.S.